All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And today was absolutely insane. What started off as a morning, we recovered the losses. NASDAQ futures were up 1.5%. People were posting this in the morning. They were saying, man, double bottom. NASDAQ 100's looking good. They're saying no more overbought. People were feeling very good about it. You had good earnings out of Europe. Even China did good. It didn't matter what the U.S. did. Everything was so bullish in the morning. And then without any news, anything at all, we ended up going down, giving up all of the Powell gains, and now the uptrend for January, you have closed by breaking it. So this is getting pretty wild. The Bears got a little bit of hope, but as you see, the Bulls are still holding up. I mean, think about it. If this was a couple months ago and you're like, we are still at 408, you would be pretty happy about it. So it's absolutely wild. We brought this up here yesterday, too, talking about how maybe some of the steam might cool down, or the fact is all of the asset managers, all of the funds, right now, more people are more neutral than really any other point they've been at in the last decade, meaning everybody's ready to pile into the top or pile into the bottom of things change. And I'll give you one more. This one came in after hours, but there's apparently a new data set about the economy in negative territory. They had this new thing from the Census Bureau. They call it new experimental data. They aggregate 15 major indicators in a single time series, and they backdated it till 2004, but apparently now we're in a negative economy. Funny how fast that changes, huh? Yeah, okay, but we have a lot to talk about, Chad. You are having a big event on Tuesday. You're going to be getting a little bit more tomorrow, and a lot of the earnings after hours today, they were pretty ugly, so we're going to see how it plays out. We're going to see what sort of action we get into tomorrow, and if you've been watching the watch list, remember, we post these every night. I hope you have. We've been talking about the S&P, kind of looking like a lagging bond indicator, and I think we're right about here if you look at it. So maybe we pop and then CPI, but hey, who knows? Anything can happen. So I hope you're ready, Chad. I got the plays for you. I got the keys and everything else you're going to need, and hopefully I see you there tomorrow. Maybe you show some love on the video. Drop that like. We would really appreciate it, but run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, we got to start with these two fun facts. I already gave them to you, but it is important on where we close. Now, I hope you guys have been learning things can change quickly. Sometimes we're bullish, sometimes we're bearish, or I'm speaking of the market. Just there's a lot of emotions and everybody goes back and forth. So one thing you got to realize, we broke below the January uptrend, and the key about it is that we actually closed there. Now, it's not uncommon where we bounce right back over it. If we close in the green tomorrow, well, then it only happened for one day. So that's the first thing. But the other thing I want you to understand is that now most of the Jerome Powell gains have been given up. And what I mean by that, if we go all the way back till Powell, so here it is. Where is it? Right there. This is Powell right here. You remember Powell? No, that's on the NASDAQ. Let me get it to you on the SPX. We got to go back a little bit, 10 days. But you remember this? This was Jerome Powell. This is where the meeting started. This is where the SPY closed today. The end of that day, you closed at 4,100. But the fact of the matter is, over these last 7 days or so, you've went down, you've went up. You had to deal with the other day, but you have now given up most of the gains. And why that's important is because that's when things got really, really bullish. That was Powell being super dovish, and it gave a lot of support to the market. So I really want you to understand those two things. But again, if you've been watching, I've been talking about being in Chop City, and it really just seems like we are getting ready for the CPI, and there's going to be a lot of implications on it. Oh, man, this chart looks so crazy. We'll go here, but I'm essentially thinking we're going to stay in either this range. Even if we go lower, I don't know if we're going to go below 400 ahead of the CPI, but for the most part, I still think the bulls got a little bit of control. There's reasons to be bearish out there. I don't think much has changed from the beginning of the year, and a lot of this has been driven on forward-looking things, so we're going to see how it plays out, but I think tomorrow it's going to give us a nice little setup, but really it's going to be about Monday, Tuesday, and thankfully you won't have to wait too long because on Tuesday you are going to be getting the CPI. Not only are you getting the CPI, you are also going to be getting the Bank of Japan, and I believe another data set, but it's going to be a powder keg, so I hope you're ready for that. But now, coming into key two, as far as this downtrend and where things are going, I mean, a lot of people were asking what happened today, and there was no news, so the market can move without news some days. I don't know if you're aware of that. We are aware of that as well, too, but the one thing I brought up is just, it's very simple. The bond yields are still screaming, but it's not a done deal. We know what the bonds are saying. Higher rates is not good for tech stocks in growth. That's historically how it has been, but it doesn't tell you when things are going to happen or when things are going to crack. And what we've learned this year is clearly things can change very, very quickly. Now, I could go back to the chart and show you the divergence between the bonds, NASDAQ, the S&P. You've seen it before, and if anything, I would borderline argue that is what has characterized every single rally over the last 12 months there, where you needed the bonds to play along. In July, that was your only time where the bonds actually did play along, or borderline, they led the way, and then the market caught up. So we don't know what's going to happen, and like I'm saying, you've watched bond yields change drastically from the end of the year to the beginning of the year, and there's definitely periods you can go where it's not going to give you a trigger of when, but it is definitely communicating something. So that's what we're getting into coming into the CPI, and just that is the elephant in the room. It's like, okay, the market has gone up a lot. There's reasons to be bullish. Maybe the economy does this. Maybe the Fed does this. But when it's all said and done, the yields and interest rates are still high, and that is just not a favorable environment. That means the yields got to follow with the market eventually, or the market will follow with the yield. So we'll see how that plays out. I want you to keep that in mind. And now coming into tomorrow, I already pretty much broke this down for you. You got consumer sentiment tomorrow. There will be a revision to the CPI, and it could have some effect, but we're going to need a big surprise. But even then, you saw how a big surprise on non-farms played out last Friday, so anything could happen in that sense. But it's very simple. This is all the jitters coming into CPI, and that's why I think we're going to be in Chop City. Whether we end up getting a bounce tomorrow, I don't think you're going to break out to a new all-time high here, or a new at least a 1 year or 100-day high, and then vice versa. Even if we drop, unless there is like really bad news, which I doubt we are going to be getting, I don't think you're going to really flush below 400, and then all of the bears are going to be rejoicing. I think people are getting ready now, kind of processing and digesting, taking in all the fear, the Google AI, the car prices going back up, all these little things, and now everybody is like finalizing all of these positions ahead of the big CPI and all of the other events that come next week, and especially just on Tuesday alone. So that's how I'm viewing it. I think tomorrow will still be exciting, just given the level of emotion we have already had this week and today. So I hope you're ready, baby, but let us get into the plays. So right off the bat, I got a couple of different plays. I made a bunch of different plays today. You're going to see some of them I got lucky on, but I'm grateful. They played out good, but one of the plays I made was Google, and I decided to buy 100 shares here. I got a little bit near the lows. I only ended up losing like $50 on it, 50 cents a share, so got a pretty decent price, and the reason why I bought it is that over the last 2 days, it's like 12 to 15% decline, and that is the biggest 2-day drop on Google stock since 2008. So I'm just looking for a flip. Last time I did that, I got trapped there on Tesla, had to wait, but we ended up being profitable on that, so that was good. But for the most part, I'm looking at Google. I want to see if it bounces at all, and just over the last 2 days, you've seen it with Google bringing the market down, and even today, by helping the market go up, you saw what Tesla did. So I think there's going to be an outsized effect here, so I really want to watch it, wanted to get in on some of the action, so I'm definitely going to be watching Google. Do I think it could go lower? Yes, I think it could definitely test $90, so that's why even on 100 shares, I'm really factoring in maybe $5 per share of loss, so we'll see what happens. Otherwise, it's now cheaper tech. I still got to make some hedges here because we have downside working against us, so I kind of like the risk to reward there, but that is play number one. Then play number two. Oh, man. Do you see this? McDonald's. You know what that is right there? Revenge? Question mark? I don't know. I'm thinking about it, but it's quite simple. If things break by CPI, this is kind of the setup that I was looking for on McDonald's. Remember, I got squeezed on it earlier, and I told you what I was looking for with it, but it's very simple. There's a lot of other value plays coming down. The only risk I think there is that if we do see a downturn after CPI, are people going to run back to those value names and run back to those defensives to hide? That would be the only thing that keeps this up. But coming to the chart, if you guys remember, this is where I got squeezed on. I said I want to wait till it pops. Maybe it'll pop again, but like this is where it starts to break down and get weak. Again, that's where it like ultra squeezed me. I think I ended up closing at like 270-ish that one time after shorting, I think at like 230 or something like that. It was awful. But there's a lot of meat on the bone. That's why I really do like it, but it has been a defensive name. So going to keep this in mind. I'm not sold on it yet, and I'm still traumatized. So, we'll find out what it is, but definitely watch out for McDonald's. I think that could be a good one, especially if you've never been burned by it. Maybe keep it small. Not a recommendation, but that is play number 2. And then finally, BABA and NetEase. So Asia has been resilient. Even this morning, they did good. Out of anything, my BABA shares actually went up today, so they still did good, and they have the AI news. So I'm hoping they outperform, but I don't know if you could really guarantee it. I still have the banks, and I think they will ultimately end up doing better. But as far as like growth, a little bit of hype news, and kind of finding a way to do the opposite of whatever the market does, I do think BABA and NetEase kind of got their own thing going on. So still holding those. Going to be watching those coming into Friday, and definitely seeing how the overnight session in Asia is going to perform. So those are the main plays. As far as everything else now, we made a couple of plays. I did Expedia, 120.70. I ended up losing $300 by the end of the day, but you'll notice I sold out like 49 seconds after the bell. It ended up coming back. I actually could have made money on it, believe it or not, but I forgot to sell out. My plan was go for the pre-earnings run-up. Again, it dropped to like 120 around there. I said, let's try to flip it. It did go up when I bought it. I just didn't get out of it. I didn't notice it. Then it ended up here. I said, okay, we're going to close at the end of the day, and I forgot to close it, and I closed it right in the nick of time, and then it dropped there, but still had to take a loss, so not too bad. But it also brought down some of the travel stocks. They kind of had a good earnings call. People were kind of bullish on that, but we'll see how that one plays tomorrow. Then I added the Google 100 shares at 95.66. Like I said, it's really not down too much, so wasn't too disappointed with that one. Then, if you remember my PayPal shares, I had these shares of PayPal, and I was like, okay, I had 100 shares, and again, we were talking about the risk to reward. I've explained it many times, to a lot of people there, but I just did something a little bit crazier towards the end of the day when we really started flushing. I said, okay, we're really dumping here. I want to see if we get like an earnings setup. So what I did, it was like right around here, I believe, like 78.60. I added 400 shares to my 100. I was down like $7 per share on 100 shares, so I had a lot of room to go a lot bigger on it. I went bigger, hoping we would get the end of the day run up there. That didn't happen, but then earnings came out. It was bad, not as bad as expected. I ended up selling out like 80.50. I made like $200 net on all the past shares and everything else. I could have made like $1,500 or $2,000, and then it came down. So even looking at it though, ended up having a good sell, but turned a loser into a winner. Definitely risky, but like I was saying, the risk to reward I was talking about all week. Go compare it to Square and any of these financial companies. I mean, they're nowhere near getting near the highs that they hit last week. Like Square, they passed October highs and we're getting, back into the middle of the year. PayPal, I mean, they just were not able to say the same. They were underperforming, so I figured, hey, they have to do really bad to go down again, so I like the risk to reward. Went with that gamble and ended up paying off, but it's not always going to work like that, so you got to make sure your budget is ready for it and just be prepared for anything. But those were the only other plays. As far as everything else now, still holding the NASDAQ. That came back a pretty decent amount, and I think the ES closed below where I covered it now, but overall, I mean, just go back. I'm sure one of these days you'll see on the watch list. This was down like 35,000, 38. We got money on that one. Unfortunately, lost a little bit more on bonds, but other names, even the ETH short, came back a decent amount. So I'm pretty happy with it. I got BABA still holding up. My Amazon shares, I'm down $1 per share. Remember, I picked those up the other day, but that one I'm still holding. And even Meta and Okta. Remember, I bought these to hedge out the plays, and I'm just showing here, pretty much I made almost like, $8,000 back on this, and none of these are down more than like $2,000 combined. So this was the general idea. I'm totally comfortable with it, and a lot of people are asking, when would I want to close some of these? Well, probably once we get this thing back to normal, that means these plays will go down. Hopefully some of them outperform, but these will move a lot slower than this one, and hopefully even kind of the PayPal shows it. I'm going with 50 shares, 100. It depends on the price level, but again, remember, these cost a lot of money to trade, but if I wanted to apply that to shares, I have a lot of ammo to go and average down on anything, so kind of being patient with it, but that's overall my plan here. Like I said, we're going to hold the BABAs and even the NTES. They're doing pretty decent. I think NTES flipped just barely, so I hope they hold up, but I am going to be tempted to take profits there, especially if things get really, really ugly. And then Bank of America, that one flipped on me down 135, so about 50 cents a share, and then Citi, they flipped, but they were actually green in the morning, but still loving the banks overall. Think it's going to be good, and a lot of people keep asking, PRVB, man, don't forget about Proverbs. He has this event coming up. I just saw it on the high there, but next week. So we're going to see what happens. But overall, I definitely feel a lot better about things than where I was a couple of days ago. That's the irony of all of this. I know we've had a couple of share plays kind of work against. Even the end phase is still down like $900 there off the 25. But like I'm saying, there's a lot of room to average down. And overall, we're making way more money now back on some of those shorts. And then if things pick up in volatility, I'm not going to be caught with my pants down. So I am pretty excited about that one. So we're going to see what happens with that, Chad. But that was everything. Tomorrow, next week, it's totally going to be an event. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you got to give it fertilizer. You got to treat it like it's special. If it ends up working out for you, that's fine. That's fine. Don't get too hyped on the good. If it ends up working against you, don't say you're going to give up forever. Don't be so dramatic about it. Don't make it bigger than what it needs to be, but make sure you give it the attention it deserves, baby. And go read it yourself. Let it cut, baby. Let it cut. Y'all don't feel me. Some people don't even know what I'm talking about. You know what I'm talking about. But Chad, you're ready for it. Be prepared. Again, it's still the beginning, man. This ain't even the first quarter ain't even done. We got to take it to the fourth quarter. You know what I'm saying? So stay locked and loaded. Stay in the game. And Chad, it's game time, baby. I love y'all. I'll see you in the morning. And peace out. Hearn.